Hey guys, welcome back. You're still tuned into trading. The market is still seeing a 30-point cut right now. It is the mid-cap index which is, under pressure right now, and it's underperforming. So that one is down over 200 points. That is for the mid-cap index, and we're pretty much at the low point of the day there. The Nifty Bank also trading with a cut of around 0.25%, but it is really IT which is proving to be the big drag today on the market. So that's what's going on with the markets. But let's get a conversation going now. Unmesh Sharma, Head of Institutional Equities at HDFC Securities, joins us now. Unmesh, good morning and thanks for joining us. This is Pavitra. It's definitely not been a good start of 2023 for our markets. What do you make of it? Even on a day like today when all global cues are positive, we got a good handover, it's still just refusing to take that and, build on any kind of gains. Do you think this is just a period of consolidation and this kind of downward pressure is likely to continue?
We think so, yes. It's not a short-term period of consolidation in our view. Our view since last August has been and continues to remain that the market continues to face significant external challenges. That is not something which has changed. In fact, it seems to be playing along exactly how we think. The market in general seems to be looking for news to prove that the Fed has finally or will finally make a pivot. So, that's really the term where everyone seems to be using these days. And if you may recall that since August, there have been times where people looked at either the commentary from the Fed or they looked at what's been happening in the inflation prints, including what happened last night, and trying to put a positive spin to that. And then what happens is that the commentary from the Fed is that, it's going to be higher for longer, plus you start getting a little bit of hiccups in terms of what will happen to inflation. So I think this fight between the bulls and the bears, so as to speak, on whether there is going to be more hawkish, more dovish, or whether it remains, hawkish for longer, it continues to remain, and which is what is leading to volatility in risk assets across the globe, and which is what seems to be affecting India as well. We don't see that ending in the first half of this year.
Okay. How are you feeling, Unmesh, about the IT companies? The companies have indicated to us that there are still some growth headwinds. Client decision-making has been delayed, and certain pockets like Europe have not recovered yet. Would you be cautious here, or do you think at some point in time it's good to get into these names?
Yeah, so look, our research team had put out a report on the demand. This was about 6 months ago, where they had said that things have started to improve, but at the same point in time, there would be problems on headwind. The other issue is that in the very short term, even if you do get some good news, like, a guidance raise or something of that sort, the big issue is that, again, macro, which is that are we going to get a soft landing? Because that is what will affect growth, which affects the demand scenario for the IT companies. So from that perspective, our core view is that it's a shallow recession in the US and possibly, deeper in Europe. This is our house view. In that sense, we continue to believe that there could be some more cuts to demand estimates going forward as well. Having said that, in that scenario, in our model portfolio, we are starting to, cut our underweight position on IT a little bit. And the key reason for that is that, thankfully, unlike the start of last year, from valuation perspective, we seem to be in a slightly better position. We think that till we get clarity on earnings cuts, we won't go overweight, but so we continue to remain a mild underweight on the sector.
Okay, got it. By the way, a lot of these IT companies, the likes of Infosys, are at the high point of the day. Infosys is now one of the top gainers as well on the Nifty. But Unmesh, what do you make of the banking pack, the kind of pressure that we've seen, especially on names like ICICI, Axis? What do you think? Do you think the rally is pretty much done, or is this just a bit of a pause here?
So in an overall scenario where, clearly we are negative on the market, I think everything has to be seen in that context. But within that, the one space where we are relatively the most positive on, and that's also our largest overweight position in the model portfolio, is the large banks, the large private banks, which includes the ICICI Axis pack. Now, is that going to be good enough for you to be able to deliver alpha on your portfolio? I think they will outperform. In this scenario, however, where generally there is some pressure on the market, we believe there will be a volatility, but at the same point in time, relatively we would be positioned within this space in the market.
Okay. How are you feeling about the auto sector? There's a lot happening here, There's a big recovery in demand in certain pockets like commercial vehicles. Exports continue to be under pressure. So in this entire, under this umbrella of stocks, what are the spaces that you still like?
Yeah, so unfortunately, it's not been an easy space to navigate. Earlier there was this entire issue of chip shortage. Then we had the issues that we are seeing in the rural, and then you had some concerns around the urban consumer itself. We, however, have certain specific positions within that. Maruti, for example, what we are saying is that looking at the way in which the sowing is happening, that hopefully the worst of the rural stress is behind us. And on the urban side, while of course there is a base effect which will start to kick in, but at the same point in time between that, we should start to see a little bit more benign environment as far as the entry level is concerned. So from that perspective, we are a bit more constructive than we were earlier, and that's a little bit more macro call that we have taken on the rural side, relatively, as compared to what it was 6 months ago.
Okay, and what would you think of a defensive play, something like a pharma over here? Do you think that this is a good place to put some money?
Oh, yes, absolutely. So you can tell from the general conversation that we are having that we are in we have a risk-off kind of mindset. What we are effectively trying to do here is looking at relative value within sectors. We're generally avoiding high multiple sectors, and positioning ourselves a little bit more on where we have better visibility on the demand scenario. From that perspective, pharma does play out well. We were underweight, I think, a little bit towards the first half of last year, which we have kind of cut to a more neutralish to a slightly overweight position now. So, yeah.
Okay, all right. We will leave it at that. Thanks a lot for joining us, Unmesh. Have a great day, and of course, a great 2023 as well. Well, for the market, very quiet really. So we've recovered a tad bit from the lows, but are still holding with cuts of about 30 odd points. Let's take a break, but here's some important information for our viewers. Don't miss out on the 19 must-have stocks for 2023. Subscribe to Money Control Pro to get the entire list of stocks that you need to know for 2023.